Who's this? Oh, you're an entrepreneur? Oh, you're a real estate investor. Oh, you're trying to learn from those who did it. Well, come into the lab then. Put your white coat on, gloves on, notepad, and let's build, y'all.
Real estate experiment. What is happening, y'all? Today I have the pleasure of having Nick Earls with me and Eric DiNicola. Did I get that right, my friend? Did I get it
right?
Listen, this is why this is a special one. This is a special one. I just want to preface it because, you know, I got my boys from Massachusetts here, and this doesn't happen often. And so I'm excited to talk real estate in the Northeast because that's where I ran away from. I went to Atlanta in the Southeast, but I mean, this is a beautiful piece of land, beautiful community. I grew up there, went to school there. I'm still there. I still dipping my toes in and out. And so it's really interesting. It will be very interesting to hear what you guys have been able to do. These two gentlemen are from Winterspring Capital. And lo and behold, you guys have known each other for more than 20 years. Is that correct? Did I get that number right?
Almost 20. But
almost
yes,
20 years. I'm going to round up. That's awesome. No, I think I want to preface that because it says a lot about what you guys have been able to do. Obviously, we were talking about this offline. You guys have 56 million of multifamily assets in development specifically. That's your niche. You have something in the pipeline. It's a big one in Brighton that's happening in a big development deal around 25 million. We're not going to disclose everything until it comes out. Then we'll blast it out. But you guys have been in this space. You're making some movement, and it's very interesting because you're tapping into a niche that, you know, and it's an opportunity. I know, Eric, you were talking about this, just before we hit the record button about the opportunities that are here in Massachusetts, and where there's difficulty is where the opportunity is. So I want to talk to you guys about that. But first of all, welcome to the lab, my Mastonians.
Thanks for having us on.
Great to be in the lab.
Absolutely in the lab. So, gentlemen, I got to ask you, you guys have some interesting background that I want to highlight first. Walk me through a little bit of, I know you guys met in high school, but I think you guys have both a very niched background, working for the same company, in a real estate development consulting firm, and then kind of graduating together to the next step, development. And then you're like, you know what, we're going to do our own development. Take me a step back, because I think it's good to give people some context of that foundation that you guys have built to then where you are today. And then we'll find out why you really went into this niche, because not everybody, typically some people run in the other direction. They go in the other direction. So talk to me about the beginning foundation of this development, education, and career that you guys started to learn together. Why don't we start with you, Nick?
Yeah, so as you said, we've known each other for almost 20 years now. Met each other in high school. Good friends, played football together, powerlifting, played video games together, a lot of team-oriented stuff. Had a couple other friends. Another buddy of ours also works in the company, Kyle. And always just kind of thought, we're not going to work for some big company. We don't work for someone else. Kind of a little bit of a rebellious streak maybe, but also we just kind of saw the writing on the wall. That quote, don't build someone else's dream. We kind of knew that from a young age. So we'd say we want to start a company and stuff like that. Went our separate ways for a few years, went to different colleges. I ended up getting my real estate license in 2011 and was selling apartment buildings for a few years, smaller ones. And we thought, okay, maybe this is the way to do it. We were saying maybe we start with real estate. That's a way we could break out of the cycle, break out of the rat race or whatever. And so we had this plan to save up money for a few years. We wanted to buy a rental, but what I learned during my time as an agent was the condo market in Boston was very strong, and you could develop condos. And I came from kind of construction background. My parents owned a general contracting company growing up. My brother's a carpenter. So I kind of had some confidence in that space, maybe where some other people wouldn't. which I could say people should be, confident to dive in. But I was confident just because of that background. So we thought, why don't we take a whack at this development thing? And that was back in 2015. And we did our first project, a small project. But it's been multifamily condominium development has been one of the main things we've been doing ever since.
Wow. So that's very interesting. I gotta say, Eric, is he always this serious? Nick, you mean business, man. When you said friends, I was like, are you sure? You sound a little serious, man. Like, are you sure you guys are friends or just business? I like that. Is he?
No, we're literally, we're best friends. This is my best friend right here.
I know. I'm messing around.
He's not as you did look a little serious on that answer. I'll agree with him.
No, Nick. Nick is the guy that I want at the other side of the closing table because this man means business. I could just tell. And let me ask you, just because let's make this fun. What's the dynamic here? Because we always talk about partnerships, and I'm gonna get into what Nick said. I don't want to let that slip through the cracks. But while we're on this topic, and talk about partnerships, you talk about who's good at what, and we're joking around a little bit. But what's, where do you feel, is it true that, you, Eric, need to be the strength to Nick's weaknesses and Nick, you got to be his weaknesses, or is that not even true? And you guys could both just go in and have the same strength. Like I haven't heard otherwise. So I want to, we're in the lab here. Let's talk about this. Do you guys complement one another or what's the deal?
Yeah, I mean, I think we complement one another, but at the same time, we have a lot of the same sort of shared philosophies and shared strengths. But there are definitely some things, that he's better at that I'm not as good at, and vice versa. And I think one thing that's kind of unique about our relationship and the way we work together is we do share a lot of these same goals. Where it's like, okay, what's the end goal here is, financial freedom for our families, that sort of type of thing. So we can sort of dive into something and, there's no offense taken if Nick will point out to me like, I don't think that's going to work. If maybe I have an idea and he says, I don't think that's going to work for this reason. There's no personal, enmity or any negativity about anything. So we have a very good working relationship. And because, we've worked together for so long, been friends for a while, it's easy to bounce ideas off each other, or we know who we can be on the same page very easily. There's not a lot of strife. There's nothing like that. We don't really butt heads. If we do, it's always like for the greater goal of the company, of what we're trying to accomplish. And so there is, to get back to your original question, there's probably a little bit of like, maybe you're a strength in one thing, me in another, but I think we're on the same page with a lot of stuff, which makes it, much easier to deal with.
Yeah, that's important. Sharing the same core values is definitely important. And on that topic, and again, being able to complement each other and being on the same page on that topic, in the beginning, when, Nick was getting into his licensed construction, were you at a different phase as well? Were you doing something that was completely different, similar? Because I know you guys were away. Where were you at that point? Just to give a little bit of context before we talk about the empire you guys have built.
Thank you. Yeah, I was down in New Jersey. I was working in New York City. I worked in public equity. I traded stocks right out of college, which was awesome. I enjoyed that. But I do remember, I always mention this anecdote. It's like I sat down in the first, 9 o'clock or whatever, in the first, minute. I'm sitting there and I thought, I don't think I can do this till I'm 65. And it's like, okay, if that's my mentality, at 23, the first minute I'm sitting here working for someone else, I think I got to start planning something in the background here. And I enjoyed it. I worked down there for a bit. Then I worked in private equity down there. And then, Nick had contacted me and said, okay, let's maybe start getting into this. So, we saved up a bit for that first project. Several years it took to save up. And then I moved back here and we sort of we just jumped right into it. He had found something, a good project to sort of invest in early on, convinced me of it. And I said, all right, this is the ticket. This is what we talked about doing. We've now found it, as he kind of alluded to at the beginning.
So you always had that itch That's that of that financial freedom itch. That's very interesting. Hey, listen, you guys are starting to creep me out, and I'll give you a quick insight here for our listeners. We got some very, very weird similarity, right? I'm here in Manhattan. I was consulting in Jersey City. This is not where
that's where I lived.
I know, but listen to this. It gets even creepier than that. You went to Stephen Institute of Technology, right?
Yep.
My supervisor at the time, who was in an investment bank, had gone to that school as well.
Wow.
And I was just like, dude, what is happening? Stop it, gentlemen. Stop it. We got to stop meeting like this. So this is very interesting.
The ultimate podcast.
Yeah, you found your dip in your toes, and maybe I need to just settle. Maybe I got my hands in too many different things. I'm well traveled, I have to say. That's half of the story, but that's interesting. So New Jersey, Nick, you're in Massachusetts, getting your license. You have construction background. That's the family background. Let's talk about this unique asset class. Condo development, am I saying that correctly?
Yes. Yep.
Why? Talk to me.
Market opportunity would be the easy answer there. That's what the original reason why we got into it. So in Boston, you have, strong backbone of the universities there, and then the life sciences industry and biotech really taken off. One of the number one cities in the country. You have a lot of demand from higher income, not necessarily super high income, but higher income people who can afford, $400 to $1 million condo, generally our price range that we deal with. A lot of demand for that. The planning agency in Boston actually did a study in 2015 for population projections by the year 2030, and we surpassed it already a couple of years ago. So couple that with the way you get projects permitted in the city of Boston. The zoning code is very outdated, so it doesn't allow very much density. So you need special permission from a zoning approval. This whole process is called entitlement, and that process is very hard and very strict. And the neighborhoods that have a lot of power, there's a lot of not in my backyard stuff going on, which just leads to a lot of projects either being denied or not being pursued that might have been built maybe in a less strict city, which leads to a supply shortage and demand in addition to the high level of demand. So that just kind of creates a situation where there's not enough housing. Condos are a preferred way for living in the city with home ownership, obviously, if you don't want to rent. So there's a lot of demand for condos, and we've had a lot of success with it.
Wow. Okay. So when I hear when you say, okay, this is very interesting. Are you saying the opportunity is because you said there's a supply shortage? Is a supply shortage there because of the difficulty of being able to build there? Is that what it is?
Yep.
So in other words, I love this because one of my favorite books is that you guys might appreciate it, The Millionaire Fast Lane by MJ DeMarco. I don't know if you guys know that. It talks about there's four pillars. There's a CENTS: control, entry, need, time, and scale. Anytime he is evaluating an opportunity, he looks at those five things. And the entry, is it a low or high barrier of entry? I'm hearing that this is a high barrier of entry, and therefore you're seeing the opportunity, which is interesting because I think most people typically want to make their life easy, but I think as an entrepreneur, as investors, you saw the opportunity where there was difficulty. So okay, so let's get some enlightenment, because I certainly need it, and I'm sure that the listeners would appreciate it as well. Let's talk about this zoning code entitlement thing. What you said something about not much density. Can you give a little bit more context? And then at the same time, I want to make sure that we're also touching on when you say condo, that maybe that could be ambiguous. Can you give me an alignment? Are we talking, 8 units together? Are we talking 12, 150? Like what kind of condo units are we talking about? I think that will help as well, because I can picture it. I'm thinking of already of Seaport and I'm thinking of all those areas. But for some of our listeners who don't really know the asset class here and the product, I think that'll be some good context.
Yeah. So, when Nick talks about entitlement and zoning in Boston, this can apply anywhere, but the city is really, it's really city dependent, municipality dependent, whatever you want to say. So, the entitlement process sort of involves, many steps, and Nick can kind of fill in if I'm missing anything here, but I'll try to make a good overview for the listeners. So, you might find your property first, whatever you're maybe looking at. There's an opportunity that comes to you and you say, okay, this is in a 2-family zone. So the zoning law for that, the zoning laws for that area say, okay, you can build a 2-family structure here. So you think by right, what we could build, then this kind of answers your condo question too, is a 2-unit building. So we could then break it into 2 individual condos. So it might look like a 2-family, a duplex type thing that someone might be familiar with. And it'd be 2 individual owned units by 2 separate owners. Or, maybe you'd have an owner, so an investor buys both and owns them as condos and rents them. But that's sort of into the minutia. So that you find your land or your property. Maybe it's a vacant piece of land and you can start fresh. Maybe it's a other old building, old house you want to knock down. Either way, you first do that and you figure out, okay, how many units can I do here? And so typically 2 units with the prices in Boston, it's not really going to work out. You want to get more than that. Maybe you find a situation where 2 units could work if the condos sell for a lot. So you find it, you see how many could I do here? And simultaneously you're looking up what are condo comps selling for? So are they selling out at a high enough price per square foot? That's kind of the basis we look at. What is the price per square foot? Are they selling out in this neighborhood, in this area for a high enough price point that we could come in, buy it for this price, construct it for this much per square foot, and that there's still a difference there to profit based on what we could then sell it for per square foot? So that's very early stage kind of this whole entitlement process. So when it really kicks in is when you actually start dealing with the city and the neighbors. So something like that, you'd find a 2-family zone and you'd say, okay, I could make money here and I could create new homes for people, but I need to build, a building that has 8 condo units in it for this to work, just based on the numbers, based on how much it costs to construct, based on how much it costs the seller, how much does the owner want for this current property. You factor all that in. So then you start working with, an architect, the zoning attorney, because you can only do 2 units as of right there based on the zoning code, but you want to do 8. So
interesting. Okay. I'm glad you highlighted that. So you're saying, you're anticipating almost, you're saying, why can you only do 2? I guess let's talk about that for a second. Why are you restricted to 2?
The city is, any city is divided up into zones based on density in the area, or typically these are very outdated. So you might have an area that's supposed to be just for all 2-family houses. It has a better feel for that area. They think having a big apartment building just wouldn't fit in. Maybe you have a downtown shopping district that's zoned for just single-story businesses, something like that, commercial, retail spaces. So different areas of the city are zoned differently. And you'll notice that some really nice cities and towns you go through, you might notice there's one area where you might see like a Dunkin' Donuts but instead of the typical colors, you see all gold and all the businesses are, in gold. These are
like historic almost like,
yeah, sure.
That's like disrupt.
Exactly. That has to fit a certain, that's not necessarily what we deal with. We're more dealing with the size and dimensions and number of residential units in neighborhoods. But all that plays into zoning and use regulations within zoning and things like that. So we'll know, okay, we can build 2 units here, but to build 8 the only way we can make money is to build 8. So we start this process. How do we get to build these 8 units when only 2 are allowed? We will also look around to see, there's a 15-unit building down the street. How did they get did they get zoning approval? Did they get variances granted? And we'll find out they did because they're in a 2-family zone, so they must have. So you start a process that's almost specific to every project. There's an overall process the city wants you to go through, but really it always takes on its own like life. Each project is like its own animal, and you meet with the neighbors. You meet with civic groups that represent an area. You show them your proposal. You try to work with them and come to an agreement that they like. Most neighbors are not, they don't like anything. They don't want any development. So you're almost dealing with 8 units or nothing. That's kind of that's the two sides you're fighting. So you go through this long process of many meetings saying, okay, then you bring your architect. Would you guys like this? And you show them a little redesign. Okay, would you guys like this? And maybe you end up landing on 5 units in this case, but you figure out, I could still make money. I could still create new homes for people. These would be homes people want to buy. So this is when you decide, okay, and you're dealing with your architect the whole time. They're involved. They're recreating the building. They're creating plans to match the neighbors' requests. You hopefully get the neighbors to support you and at least move them away from opposing you. And this is all in preparation for your zoning hearing, where you'll present your, final proposal and say, we need variances granted on these zoning restrictions and these zoning requirements. So you might have, your building in the area might be allowed to be 30 feet based on that zone, and your building is going to be 40. And you say, I need a variance granted for height. Same with side setbacks. Maybe it has to be at least 20 feet from one side, but your building might only be 10 feet. So these are sort of dimensional variances. This is, the use variances would be something, maybe you put a residence in a downtown area, an apartment building where it's not zoned for that. It's zoned for more commercial stuff, something like that. And a density variance is, cities deal with density differently. Nick mentioned it. But you'll have sort of specific metrics that a city uses to say how big should this thing be based on the lot size, like percentage of lot coverage or a ratio of the floor area. So I'm getting really deep into this.
This is the lab. I'm glad you went down deep, because again, we don't appreciate this when you see it, and not every. And I'm going to get to a next point, which I'm excited because you opened up that door. But not all real estate is created equal. And this is the point we're trying to make here.
Yeah, that's true.
As I'm listening to this, Eric, and by the way, I got to say that was a very seamless transition, how I asked a question open-handedly, and then you just took it over. You guys are just good at this. Right. So I appreciate that. But okay, I want to know who, and I'm sure the listeners would love to know. You mentioned neighbors, you mentioned city. I mean, it sounds like there's a lot of stakeholders involved here. Who are those people, and what does it take to get something approved? Because I guess in order for you to know that, you got to know who you're facing with here and what their intentions are and what they're trying to protect, your stakeholder management. Who are these folks, just so we have more context? Because it sounds like an entire committee. You're going to war here, like
multiple committees.
So who are these people? Is it neighbors, you said? City, as in like the city? Like, who else is involved?
Yeah, so I would say, again, that this can be completely different process from city to city. But like we talked about earlier, the red tape and the barriers create the opportunity. So in a lot of cities that have very high prices for condos, there's going to be a similar process to what I'm describing, and strategies could be used, in New York City, in Boston, San Francisco. Cities like this are all going to be pretty similar, probably. But for us, we have to have a zoning attorney involved. That's someone who we hire to represent us throughout the process. They also file the petitions on our behalf. You'll have your architect involved, because you need obviously to be presenting not finalized plans until you come on a final design, but preliminary designs that you can discuss with the neighbors and the groups. And then that's your team. And then on the other side, in Boston, you've got the mayor's office, who is kind of represents the mayor and also tries to represent the community. But sometimes, they might say the community is slightly against your project, but has some supporters. The mayor's office might support you in that situation. If the community is completely against you, then they're not going to support you. But, they kind of had their own agenda depending on what the mayor's policies are. So we just had a mayor, Marty Walsh. He left now because he's with the Biden administration, but he had a very pro-development policy. So even though the city itself has these very restrictive rules, there's not political muscle to change the rules, but the mayor's office during this sort of approval process is still pro-development. So there's kind of nuances to it. So that's the mayor's office. And then you've got civic groups. Every neighborhood has its own civic group, which will be kind of made up of, kind of politically active people who care about development, I guess, and this sort of stuff. Usually
in favor
older
of
people.
in favor of development or against it.
Could be either. They're usually against it, but you'll see people in civic groups that are in favor, but they're just rare. The thing I'll say is that the thing that motivates you to join this group or join these meetings usually is negative feelings, because it's going to be like a 7 p.m. on a weeknight or whatever, and a normal person is just going to throw the notice in the trash. Someone who's pro-development will go, oh, okay, nice. They'll throw it in the trash. The only people who show up are people who are pissed off, because they have the motivation. So you're dealing with a negative crowd from the beginning, because you'll go around the neighborhood and get letters of support. And there's a lot of people who do support it, but they don't show up to the meetings. And the letter doesn't.
They love their dinner time a little bit more than they do.
Exactly. Right? Yeah. So there's people who do support it and they have no problem with it, but they don't show up to the meetings. And the people who show up to the meetings hold more weight. So the people who join these civic groups have the most power. And then you also have the direct abutters, the people who are closest to your project within, I believe, 300 feet. Is it, Eric? Yeah, 300 feet. And those people show up to separate neighborhood meetings. So those are kind of the major parties involved with the preliminary process. You've got to kind of get on the good graces of all of them, or try to anyways, do your best. And then finally, the last group is the Zoning Board of Appeals. They're the ones who grant you permission, and they kind of look at how well you did at appeasing all these different groups throughout the process. How you appease them, there's a lot of different ways, but some of the strategies that have really worked for us is a lot of these projects we're doing are what are known as urban infill, where it's already a developed area, but there's some parcels that are kind of, say, like we're talking about the 2-family zone earlier. Say you're in a 2-family zone, but the lot is 2 times the size of all the other lots in that zone. We'd call that an underutilized parcel because it hasn't been developed to really an appropriate use. It's a little bit different from all the lots in the area. So we look for lots like that, but when you're going into those areas, it's already developed. So one thing that's very important is making your building blend in with the neighborhood, respecting, traditional architecture to the area. Doesn't mean you have to just copycat it, but
I have like a postmodern building in an area that's completely the opposite, something along those lines.
A lot of fight on those.
Exactly. You'll get huge opposition. Those can be built. We've built them, but it's only in certain areas where you're not smack dab in the middle of a bunch of triple deckers that were built in late 1800s. That you're gonna have trouble trying to build something creative in that area. So that's a very important one, and also trying to find ways to hide the density. So say you're in a 2-family zone and you're building 7 units. We had a project like this. It's all triple deckers. You're going down the street, very densely settled area. We had a long, narrow lot. So what our architect designed it so from the street, it just looks like a triple decker, like a traditional 3-family, like 3 units in it. But the building extends very far back into the lot, which you can't tell from the street. It blends right in. People have actually mistaken it for a 2-family. So that sort of thing. And you have a good architect that understands how important it is to get the neighbors' approval, which we do. That's a very important thing, building a team like that, because they'll put the extra effort in to some creative designs. We've had a couple projects approved recently that have all followed this strategy, where it looks like it blends right into the neighborhood, but we're actually tucking in 10 units or 6 units or 7 units.
You're kidding. But you'd feel like, are you saying it's just the optics that matters at that point?
It helps a lot. Yeah.
Wow. Jeez. I mean, just listening to that, I broke a sweat. I mean, you guys must love politics. I mean,
No.
this is a whole no. No, you're like, no. So let me ask you real quick. How involved are you in this this straining effort? And it's worth it, obviously. Is it more your lawyer? Is it more like you guys are showing up to those meetings? You delegate someone else? Like, how does that look like? Are you sending Eric? Are you sending, you guys rotating, rock, paper, scissors? Like, who's going to these meetings? Like, I want to, how does that work?
Well, no, we're all there. The whole team is there. We'll sort of start off, introduce ourselves. Sometimes I think it's, if the attorney isn't there, it's almost like better off, but you need them because of the legal nature of the variances. And it's just how it works in Boston. Every developer has their attorney sort of make the case, because that's what you're doing. You're kind of making a case to get these variances granted, even from the start of this process with the neighbors. Because if you're in a 3-family zone and you just want to do a 3-family building, you don't need to go through this process. You could just go apply for your building permit. The architect's there, we're there. We've seen developers who have, once they got to that final stage, the zoning hearing, where they've brought, neighbors, people who maybe live in a building they own and kind of support them and stuff. See, there's a lot of strategies, but the key team members, the developer, architect, zoning attorney, are usually at all the meetings. And we have, we've had a couple funny almost situations where Nick and I will show up at sort of the first meeting to introduce ourselves. And I think some of these people are almost thrown off. Where younger guys, they expect these guys like buttoned up suits and everything, and big greedy developer. And then it's us, and they're almost a little like thrown off. Nick's got the beard, and we're just like, I'm kind of tall and goofy. And so it's like it's a funny thing. We had one where the 10 unit, Nick, we went up and we thought they're going to have some screen to present on, but they didn't. So we had some pamphlets that we handed out, and then we held our phones on stage in shorts. It was a very, remember that, the outdoor one? So that it's those are kind of funny anecdotes, but generally speaking, you go and you present, you introduce yourself, you tell them how you're connected to the community. And that kind of kicks it off. And then you're all involved with every meeting from there.
Got it. So Eric, one second on that note, and I got to ask you both this. I'd love for you both to chime in on this. For me, real estate has always seemed like a win-win situation, right? We talk about improving the community, property taxes, etc. Why so much pushback? Is it just for the sake of maintaining a specific code? Like, is there some other side that we're not? Like, what is the other side thing? Do you guys know? You must know at this point. What is the pushback here? Doesn't everybody win? Eric, what are your thoughts on that?
I mean, we definitely have a lot of thoughts on that, because what you just said is exactly how we would think about it too. Everyone wins. We put up some of these condos in new areas. Not only is it maybe replacing an underutilized lot or a house that's old and decrepit, maybe no one's even living in it, an eyesore for the neighborhood. Not only that, but it increases the property values without fail. And then another developer says, oh, they did a 6-unit building over there. Okay, I got to get in this neighborhood. Can I give you more? Mr. Homeowner down the street here, Mrs. Homeowner, can we? And it's funny though, because you say that, and that's how we view it. And we're, on more property taxes. Exactly. You're bringing people who want to live in this neighborhood. People aren't just, it's not just about us making money. A lot of people kind of have that perception, but it's about people now are buying a home to move into your neighborhood that maybe one, or even, maybe two, maybe zero people were able to live on that property before. Now 6 families might, not just 6 people, maybe have 20 people in this building. So that is how we view it. But, a lot of you kind of you go up there and present, you almost get like the tomatoes thrown at you, you kind of have to just take it. We get people who shout out like, you greedy animals. And because they see people buying a condo for 500 grand, and they think we're getting a $500,000 check into our pocket. They don't know you got to get a big loan on this, put personal guarantees on our own homes, and will cost, all this money to build the unit. And then you got to hire agents to sell it. It's just another business. And I think a lot of people don't realize that. And they don't want the construction next to them or the sound, which, that to me is honestly the biggest, almost like most reasonable objection we get is, I don't want this construction site next to my home, which that's reasonable. But a lot of the other ones, we can't figure it out. We don't get it. People say, oh, you're displacing people from the neighborhood. We've never done that, once. We've never done that. There have been times early on, we bought a 2-family. We lived in it. We lived in the neighborhood while we were permitting it for, almost a year. No one had lived in it prior. So I think people a lot of times will have sort of a, the wrong perception about what a developer is trying to do, at least in our case, because we are trying to do stuff that fits in with the neighborhood, and we're almost at as complete of a loss as you are. And we see these people all the time. I don't really know.
So you brought up, Eric, you brought up a really good point. And Nick, I want to get your take on this too. The one point that I heard, and it's a real thing that we're talking about here in America and really across the world, is affordable housing, right? And affordable housing, I'd love for you guys to maybe help me, because you guys are more qualified than anybody else. I did see on there, you guys, were designated the developer of choice by the Department of Neighborhood Development for affordable homeownership projects in Roxbury, which we know is an area that's, where it's being invested into, right? It needs some development. But when you guys hear affordable housing, or when you hear someone say, you're pushing us out, help me understand, define like what it means for you. What's the right way to do it? What's the wrong way to do it? And again, we're all in it to make money, build communities, build win-wins. Maybe can you highlight how, in your turf, you've seen this, how it's not always a win-win, and how maybe developers or people who are investing with those kind of developers, how can it be done the right way? Is there a right way? Loaded question here, but that's what we do in the lab. Nick, I'm thinking on you. What do you think?
No,
what are your
let's go.
Thoughts on that?
Let's go for it. I think there's a lot of elements to it. What we're building a lot of times is more luxury product, but it's new construction. Like, that's kind of the nature of the beast. So unless you're getting some kind of subsidy, which we can get into the affordable housing project we're doing, unless you're getting some kind of subsidy from some outside source, yes, companies need to make a profit. They can't just do it for free or at a loss even, which would be more likely. So in my opinion, in Boston, a lot of the projects that you see for this condo development strategy, especially, a lot of people have, made names for themselves and risen in this market and have good companies now. And I don't think they've displaced a single person. They're buying a 2-family or a single family that's owned by the same family for 40 years in East Boston or Dorchester or whatever. And those homeowners are long-term residents, and they're getting, they bought their house for 40,000 or whatever decades ago, and we're writing them, us developers, we're writing them checks for $1 million, $2 million,
I was gonna
whatever it
say,
is.
right? I mean, that's the reality of economics, and that's what's happening. It's not like people are getting the boot here and you know and it's just being asked to leave, right? I mean, there's money involved in this, so I'm glad you're highlighting this. And so is that so? You're saying, what about you know, and I'm sorry for interrupting. I think you brought up such a good point. What about, you know, you look at a place, you know, like Seaport or something where it was completely deserted. I don't know if you guys touched that area. There was nothing there, right? And you're just building up. Is that the same kind of friction there, or is that kind of a different kind of land of the game here?
That would definitely be. It's not, I'm not going to say anything's easy to get permitted in Boston, but probably a lot of those larger developments there, while the Seaport was going up, as I said, former Mayor Walsh, that was kind of a pet project of his in a certain sense. It rose, you know, under his leadership, and a lot of those projects, I think, probably had an easier time getting permitted for whatever a 200 unit building than we have for some of these like 6-unit buildings we've done.
All right, so okay, so here's the big elephant in the room, right? You guys are doing this at scale. You're raising money now. How does that look like when you have so many barriers? Like, you know, typically some of the folks we've had on is like, oh yeah, value add. Here's the game plan. Here's our operating memorandum. You know, easy enough. You guys are dealing with some hurdles up front. What does raising capital look like on those? Do you raise it before, raise it after you get clearance? Do you spend the money and then maybe not even get to, you know, follow through if you don't get a variance? Like, how is that factored into your risk? I don't know if, you know, Eric, you want to drop a little insight on this as well, and Nick right after.
Yeah, I mean, there's a couple components to this, because what you said, that's a very accurate description. It's not a slam dunk. Okay, guys, here we have this property. It costs this much. Invest this much, and you know everyone will get paid. You'll get a return. Because of all this uncertainty, you really don't know what you can build. So there's a few avenues you can go, and strategies that we've used to make this work. One is you can buy the property outright and risk that, you know, you're not going to get approved, but you have a backup plan. You know, okay, it's a 3-family zone. Worst case, I can do 3 units. I did the math. It'll probably still break even, or at least won't lose money. In those type of scenarios, we try to hold off bringing in investor capital in, if we can, until maybe the point of zoning approval, or we make it clear that here's the scenario. This might happen. If it does, this is what you're kind of left with. You probably won't lose money. We'll be very clear. We haven't lost money in a project. We've been fortunate enough, but we've been very careful about the project. So we might say to potential investors, here's the scenario for this one. If it does work out, you know, you're taking a bigger risk with us. You know, you're going to get a bigger piece of the pie, something like that. So that's avenue one. Avenue two would be the same piece of land you find, but you go to the owner and say, okay, can I buy this from you contingent upon getting approval for 10 units? And so that means, like, say maybe if they just went on the open market, sold their land, they could get 500 grand for it. We might have to go to them and say, look, because we would do the math and know this could work. We might say, look, if you let us wait to pay you or back out of the deal, either one could happen, until we get approval or permits even, which would be further along, for 10 units, we'll pay you 800 grand for that same. So it's, you know, you can get some owners. We've had this happen where some are like, okay, that sounds awesome. It doesn't work out. I still own my house. No problem. You're on your way.
Especially if they weren't, maybe that was in there.
They weren't even thinking about it. Exactly.
Like, oh yeah, I'll grab the icing on the cake.
That's right. Yeah. So then they have a year or two to find a new house, and they know, you know, we're upfront with them. Look, this isn't a guarantee. It might not work, but we can't risk spending all this money because nothing else on your property would end up being a profitable project. And then the third avenue would be buying in fully entitled project already. So someone else, and we've done this too. This actually we're doing with our big one coming up. Someone else did all the work. They spent a year or two going through this whole entitlement process we keep touching upon. And they got approval from the zoning board. They got their variances granted. They then submitted everything to the city, eventually got their permits to actually demolish or build the new building, always build, sometimes also demolish the previous one. So they get their permit to build, and then you buy that from them. So maybe though, this is where the situation is there, differs there. Maybe that's $500,000 property we were talking about earlier, the example. Maybe they got it entitled for 10 units. So now they have architectural plans that they had worked on and spent money on the whole time. They have their time and effort, their zoning attorney, and they did what we believe is the hardest part is really getting to that final step, dealing with the neighborhood groups and the mayor and all. And they say, yeah, I'll sell you the permits to build this 10-unit building here, shovel ready the day after you buy it, but it's going to cost you 1.2 million, something like. So that's kind of the three avenues we've gone.
I heard, I believe I had a gentleman who came on who talked about this strategy, or it's almost like you're selling the potential. Hey, here's what we've done. We've gotten this, we've gotten the permits, gotten this. I think it was a land guy. Maybe he was saying, hey, I'll have to excuse me for the language, because I'm still, getting familiar, whether it was the variance or whether it was shovel ready, I think is what you said, and it's almost like, I don't know if it's flipping. I don't even call it that, but you're really saying, hey, or what, it was someone also who had actually done a proof of concept, almost like a POC, where you're saying, hey, I've done a few value add units, and I know this isn't necessarily what you're talking about, but it just reminded me. And by the way, you could just take it off. This is the scope of work. This is what you can continue to do, and this is what you'll get. So that's kind of what it reminds me of. That's very neat. Wow. So from an investing perspective, I'm very curious. Maybe you guys might be able to give insights on us here as we're listening in a lab, and it's been such good gems that there's so much curiosity every time you say something. I'm thinking of the next question of, as you're speaking. But is there a way, and maybe Nick, you can help me with this one. What's your take on doing single capital raising for single properties versus what funds do, where they kind of allocate maybe the risk? Like, is that something that's ever come up? Is that something you guys even dabble in? Do I have it completely wrong? Just because I'm thinking, you guys might be able to balance, if someone, maybe it's a fund, maybe it's like, hey, this property C we're working on, but at least B and A will balance this thing out. Like, would that work in your favor with your model? And if not, why not? Is it more complex? I mean, it seems like you guys are good with the paperwork. I mean, it wouldn't be, what's your take on that? Is that something you guys have explored, maybe from a business model perspective? And
we've always done individual project raises. And I think it's because we've been within a niche, but we're also kind of opportunistic. Whereas I think if we started a fund, we'd want it to be unified under kind of like a general philosophy of the sort of acquisitions we'd be pursuing, like most funds are. And I think we have a business strategy that we're just getting into right now, of converting offices into apartments. That would actually be a good fit for a fund model. Once we've done, we've got a few off the ground, get a couple of those projects under our belt, that would probably fit for a fund, because you could say, okay, the strategy of the fund is we're going into these older office buildings that are kind of in areas that are more appropriate for residences. We're leveraging our skill in getting these projects approved and entitled to get a special permission to do apartments instead. We kind of pursue opportunity zone stuff. We pursue stuff with historic tax credits. I think that would be a good fit for the fund. But whereas on the condo side of things, you could do a fund, and I'm sure they exist, but in my opinion, each deal is kind of its own animal, and it's more appropriate for individual raises.
Interesting. So, and when you say each deal is different, do you have, based on the way you guys raised your capital, is it more of you have your investors where some of them are more risk adverse and you put them in this pool and some of them are not? Like, I'm just curious, like on a deal by deal, is it the same for all the people that you serve, or is it more like, oh, I think we should call John, Joe, and Jill, right?
I think we kind of look at it as we would present anyone who's invested with us or who's interested in our projects. We'll present any project to them. We don't necessarily think, okay, this one might be too risky for John. This one's better for Jill, something like that. We'll present it, but the feedback we'll get is clear sometimes that, okay, I don't think I'm interested in this one. Show me the next one. Or, oh, perfect, this is the one I've been waiting for. That type of thing.
Gotcha. That's fascinating. So as far as the end goal with you guys, it seems like you talked about office to multifamily, obviously the condo thing is a big niche. Do you guys, as far as your portfolio goes, do you also do just traditional value adds, or do you stay away from it, or is that part of the portfolio? Because I think I see something here about long-term value add multifamily. Is that something you guys are still actively doing, or have you dabbled with, or?
Yeah, we have a portfolio kind of our own here. And I would say the office strategy is kind of value add. It's just like value add plus with more steps. So we would still consider that value add, but we're more, since we're developers, we feel that we can generate even greater returns pursuing these sort of more complicated projects that maybe some other people couldn't do. And we see a lot of competition in the market of just kind of light value add, especially right now. So this makes more sense to us.
Yeah, totally. I got to tell you, after listening to you both, it really makes me want to be as passive as an investor as possible, and me trusting you guys to handle those meetings, handle the paperwork. I mean, if there's ever a pitch about why you should become a passive investor, it's for that. And obviously you guys are good at what you're doing, and I could definitely say you're earning the dollars of your all your investors that come along the board, because it's certainly a niche, and I think obviously everyone else who's investing with you is getting a reward from it, from your strategy, your hard work, and your dedication, and it's really remarkable to see that. What's next for you guys, though? Let's give a little prediction here. We're here Q4 2021. You guys are young, you guys are crushing it. How big is this vision? What do we want to do that we haven't done? Where do you guys see you're taking this team? Where are you taking it next to? Is it something of the same? You got some projections you want to put out there, and that way I can look back and say, I remember they told me they weren't messing around, they said it in the lab. What do you guys got for me?
We really want to grow this office conversion component of our business. We're looking at we're still focusing in Boston on the condos. We don't see that dying down anytime soon. But as Nick mentioned, we're sort of opportunistic guys. So we're also looking at trying to develop larger scale apartment complexes outside of Boston, where there's not as much red tape. There's demand for rentals. It's tough within Boston. At least some of the bigger guys can really do it. And they have methods that have worked. Maybe they've owned a piece of land for a long time, but for our company, it's been difficult to find a way to develop apartment buildings that we can hold on to and rent after the fact. The condo strategy, of course, we're selling these units to homeowners afterwards. So as Nick said, we have a portfolio ourselves of some apartments in and around Boston. But that's kind of the next frontier for us, is expand upon this office conversion. There's a lot of underutilized office space in surrounding cities of Boston, where the zoning code's not as restrictive and the city wants to work with developers. So to fix some of these buildings up and utilize them again, put them in their sort of best and highest use. So that's something we really want to focus on, as well as trying to brand new construction, new apartment buildings. We really want to focus on that too, outside Boston, that we can hold on to, that Winterspring Capital can own and rent out, for indefinitely. So those are two things we're really focusing on. And then aside from that, we started a nonprofit, the Lucky Puppy Society. And so
I
what
was gonna
that's
ask.
about is, oh, you saw this. Yeah. So that's, we can get into that more, but those are kind of the main things that we're focusing on. That provides funds for surgeries for dogs where the owner otherwise couldn't afford it. So a percentage of all profits that we make goes towards that.
Oh man, that's amazing. I was involved a couple years ago into a called Evolved Enterprise, which is it's a book actually. I should have it around here, but it's every strong company has a deeper rooted mission, and I love that I saw that you guys recently. It seems like in your recent venture. How did you get into the Lucky Puppy Society? Like how did that come about?
I think it was Eric and his wife's idea originally. We all kind of grew up with dogs, big dog people, and Eric's wife came from a nonprofit background, so it just kind of seemed like a something that might make sense, and it was kind of in limbo of like IRS paperwork for like a year. We actually tried to start the company a while ago, and it took a long time to get all the paperwork filed because it's a nonprofit. Now it's up and running, so we're pretty excited about it. We have a form on our website, luckypuppysociety.org, where if you know someone who has a dog in need, you can fill out that form. I've tried to call local dog shelters and veterinarians and stuff. So just anyone who knows someone who has a dog in need, go to our website, fill out that form. We'll get in contact with you.
Wow, that's awesome. That's really neat. I almost have to ask because you kind of just led up there. Like, do you the buildings that you guys build, are they pet free, or is there some synergy there? Like, no,
They're pet
no?
friendly.
Pet friendly.
Yeah,
That's
they're
what I mean.
definitely pet friendly.
I meant pet friendly, not pet free.
Yeah.
Thanks for the correction. Yeah, no, that's wow. You talk about vertical integration? That's the way to bring it all together right there. That's awesome. It's really neat to see always, something bigger than the business and that taps into a nonprofit. So I can't tell you how much I appreciate you guys coming on, kind of sharing your very and reason I say unorthodox is because we're 155 episodes in. We haven't had this kind of enlightenment in the condo development space, and I think it's something that what I like is operators like you guys, when you're able to have a unique selling point, differentiate yourself from the pack, and at the same time continue to bring value, no matter how much of the paperwork is. That's what it's all about, and that's how you differentiate yourself into the marketplace. Try saying that 3 times fast, but no, it's nice. It's really nice, and it was definitely glad we didn't let the serendipity go to waste here. You guys being from Massachusetts, I'll be able to stay in touch with you guys and maybe see some of the kind of work you're doing as I'm even just driving by. So I want to give you guys a big thanks. And I know you guys are coming in and you got tons that you're going to offer. So we definitely want to keep tabs on you. I know this is Winterspring Capital. Where can the people find out more about what you two are doing collectively? And then we do have a little special present on behalf of Nick that I want to highlight to the listeners. But where can we tap in with you guys collectively and even individually?
We're pretty active on Instagram, just Winterspring Capital, one word. Our website, winterspringcapital.com. Tons of articles, investor guides. We've got an investor toolkit on there, a bunch of useful stuff to look at on our website. And then Eric and I are on LinkedIn, just our names.
That's right. If you guys check out that LinkedIn, you see that these guys are not playing around. They are dedicated and they have very similar backgrounds. They've been doing this together, and it's refreshing to see you guys are still pushing through that vision and making things happen and opening up doors and building them. No pun intended there as well. But absolutely want to give Nick, if you guys want to tap in a little bit more into the development space, I know I will be. just educating myself more on it. Nick, you do have a new book called Millions Through Multifamily Development that we will certainly be including in the show notes. Where is the best place people can check that out? Is it, on website, Amazon? Where should we go for the book?
Yeah, you can get it for free at winterspringcapital.com/development-book.
Development, one more time.
Development-book.
Perfect. So that's development dash and then book after Winterspring. Is it winterspring.com? Did I get that right?
Winterspringcapital.com.
Winterspringcapital.com. He's challenging me just like Eric's last name here is just testing me. Winterspringcapital.com / book.
Development-book.
Development-book. There you go. Whew, gosh, guys, if you're driving, keep your hands on the wheel here. I've had a wonderful time with these guys, and I want to make sure that you guys check that out. It will be in the show notes. You won't miss it, and you definitely want to make sure you're supporting these two gentlemen. And off we go with Winterspring. And just like that, guys, we are out.